So let's make sense of the story and talk about what it may or may not mean. Joining us on set, our friend Seema Modi.
Brian,
Welcome,
thank you. It's great to be back. And a big story today, we saw Oracle move as much as 5% on this report from The Information that alleges that Oracle's cloud margins, which is tied to the build-out of AI infrastructure, will be lower than what Wall Street is currently predicting. And that's due to the cost of buying NVIDIA chips, the capital-intensive nature of building out data centers, whether it comes to the power issue or also labor. What's important to note is that this concern around long-term profitability is not new. Even when Oracle came out with that blockbuster report last month and came out with that mega backlog of cloud contracts up 529%, also known as RPO, which is what sent the stock higher by as much as 40%. Even then, analysts who covered the stock raised the concern about visibility. What is the return on investment? What does the long-term profitability picture look like 6 to 12 months out? And I think this report is now showcasing some of those concerns coming back to light. What we do have is in less than a week, Oracle World kicking off in Las Vegas, where we will have the two new co-presidents alongside Larry Ellison, the founder of Oracle, who will be on stage discussing the Oracle build-out of data centers, the growth opportunity. And after that will be the Thursday Analyst Day, where the financially motivated questions around profitability, what the tenure of this OpenAI partnership looks like, will likely get addressed and will obviously be market moving, given that there are now these concerns around what the picture looks like for Oracle.
Well, one would hope that whomever might be at that Oracle World in Las Vegas will ask either one of the two CEOs or Mr. Ellison where they're going to get the power. That aside, this was a funky report, Seema, because it came from a tech research publication, The Information. I was trying to figure out sort of what it meant. Like, what was the reaction to this report? Like, was it like, oh, Oracle has accounting shenanigans, or this is kind of how we do it?
I think to your point, this is just a pay-to-play move for companies like Oracle that are seeing themselves as a key enabler in the whole AI workload space, and therefore think that they need to continue to increase capital expenditure to be a critical player in this whole AI story. And so a report that suggests that maybe margins are going to be a little bit weaker than expected in the short term. But the big question is, when does that profitability picture improve in the long term? And that's what's being sussed out by the street right now. I think the power play story is going to be interesting. You know, right now, yes, there's a learning curve around building data centers and understanding the capital-intensive nature of power. But over time, you would hope that that would be commoditized and become less of a concern.
It feels funny to be poking at margins when we knew the margins weren't going to be good, right? And so if you're talking about a gross margin, and this report referred to $900 million in sales and $125 million in profit, so about 14% gross margin. What I've seen the market do for the last 3 weeks, and this is like open to anybody, but I mean, it feels like no one's paid attention to margins. No one's cared. Why do we care about it today? And so I think it's dead on. I think we've worried about the profitability of all of Oracle's business. In fact, the story for Oracle has been this transition from highly profitable software business, margins in the 60s to 70s to OCI, which is in the mid-20s at best, and this is below that.
And I think that's the point, is that I think it was the separation between the 70% that people thought it was and the 14% that it is. I think it was just the separation. They knew it was low, but I don't know if I think that stock fell 7%. It was like Steve Grasso dropping a penny on the street. It's like a stock that's gone from 100 to 284, whatever it is. Right. Let's not make too much of this report.
I understand
it did move the stock. It was a compliment to Steve Grasso.
Is it a lot or a little?
I don't know. It was a little. My point is the stock moved a tiny bit in relation to how it's moved the last year and a half. It wasn't like a catastrophic fall for Oracle.
No, but I mean, remember when that sort of stunning RPO report came out, right, of this giant backlog? There was, at the time, discussion of, I mean, basically it was some wholesale business, right? So that was a kind of much lower margin business that would be low single digits. So, I mean, that's not new, that some of this, there would be a margin hit here. I think it's more the idea of the market is getting concerned about, we see tons of just giant deals. To your point, how will they happen? When will they happen? Will they ever reach the promise of these very, very huge headline numbers? And so they're sort of wondering, all right, well, let's see how it actually plays out. We haven't really seen that yet. We do see NVIDIA's numbers because that's revenue now, but we don't see yet. They've talked about $3 to $4 trillion over the next few years. We haven't seen that yet. There just seems to be, I think, cracks in the belief that this is going to keep going gangbusters and ultimately it's all going to be worth it. It's not all going to be worth it to everyone who's involved. So I've actually been paring back somewhat on anything that has exposure. I feel like I got to just take some money off the table.